Pierre Cardin once built a billion-dollar fashion empire. His signature alone was worth $50,000 per letter, and he dressed the Beatles and even designed for NASA. But by 2020, his brand was worthless. Nobody wanted it, even at a 90% discount. In the next 10 minutes, I'll show you the hidden addiction that destroyed Cardin's empire and the 3 wealth protection laws every entrepreneur must know to avoid the same fate. Welcome to The Wealth Project, where ambition meets opportunity and your journey to wealth and luxury living truly begins. Here, we deconstruct the playbooks of the world's most successful so you can transform your future. If you're ready to elevate your life, subscribe, follow, and ring the bell so you never miss a masterclass. Welcome to the exclusive club, where you don't just watch, you learn to win. Your next lesson starts now. In this video, you'll discover the exact addiction that turned Pierre Cardin from fashion royalty into a cautionary tale. More importantly, I'll share 3 laws of wealth that protect billion-dollar brands and your own business or investments from collapse. This isn't just about fashion. It's about a trap that destroys success across every industry, and you'll see how to avoid it. The visionary genius. Picture Paris in the 1950s. Fashion houses like Dior ruled with iron fists, creating clothes that looked backward. Then came Pierre Cardin. This man was a revolutionary. In 1954, Cardin unveiled his bubble dress. It looked like something from outer space. Fashion critics were horrified, but customers lined up around the block. His space-age collections turned fashion into wearable sculptures. NASA commissioned him to design a spacesuit in 1969. But here's what made Cardin special. He understood that fashion wasn't just about clothes. It was about identity. When the Beatles wore his suits on the Ed Sullivan Show, they weren't just wearing fabric. They were wearing the future. Cardin's name became synonymous with innovation and cutting-edge luxury. By the late 1960s, Pierre Cardin was mentioned alongside Dior and Chanel. His boutiques in Paris were pilgrimage sites. A single Cardin dress could cost more than most people make in a month. Customers lined up to pay those prices because owning Pierre Cardin meant you were part of an exclusive club. But here's where our story takes a dark turn. Because Cardin's greatest strength was about to become his most dangerous weakness: the brilliant business innovation. In 1959, Pierre Cardin made a decision that changed fashion forever. He launched the first designer ready-to-wear collection. The fashion establishment was so outraged, they temporarily expelled him. But Cardin didn't care. He had discovered something more valuable than fashion approval. He had discovered the power of his name. This is where Cardin's psychological trap began. The ready-to-wear line was incredibly successful, generating massive revenue with little effort. Cardin realized his name itself was an asset that could be monetized far beyond what he could personally create. So he started licensing. First menswear, then accessories, then everything imaginable. By the early 1970s, you could buy Pierre Cardin ties, watches, and luggage. The revenue was intoxicating. While other designers struggled to make money from actual designs, Cardin collected royalty checks from hundreds of products he never touched. The numbers were staggering. At its peak, the Pierre Cardin brand generated over $1 billion in annual retail turnover. Cardin himself earned tens of millions annually just from licensing fees. But what Cardin didn't realize was that every licensing deal was like selling a piece of his soul. And the more he sold, the less valuable each piece became. The explosion of licensing. By the mid-1980s, Pierre Cardin had become addicted to licensing revenue. The strategy was simple. More licenses meant more money, but there was no strategy beyond that. No quality control, no brand coherence, no long-term thinking. The numbers tell the devastating story. In 1970, Cardin had approximately 150 licenses. By 1985, that exploded to over 800 licenses in more than 90 countries. By 2000, he reached 900 licenses worldwide. But here's what's truly shocking: the range of products bearing the Pierre Cardin name. Picture walking into a discount store in Bangkok. Pierre Cardin frying pans next to Pierre Cardin bed sheets. Pierre Cardin towels besides Pierre Cardin furniture. Pierre Cardin bottled water. Even Pierre Cardin sardines. The name that once graced the most elegant women in the world was now stamped on products with no connection to Cardin's design philosophy. This relentless expansion systematically destroyed the brand's most valuable asset: its exclusivity. Here's the brutal truth about luxury. It's fundamentally about scarcity. When something becomes common, it ceases to be luxurious. But the true cost of this strategy wouldn't become clear until we compare Cardin's approach to a brand that took the exact opposite path. The Tale of Two Fortunes. To understand the true cost of Cardin's licensing addiction, let's compare what happened to his creations versus a brand that fiercely protected its exclusivity: Hermes. A 1968 Pierre Cardin Cosmos dress was a masterpiece worth several $1,000s in 1970. Today, after decades of brand dilution, that masterpiece dress barely kept pace with inflation. It might sell for $3,000 to $7,000 at auction. Compare this to a Hermes Kelly bag from the 1970s. Originally priced around $800, this bag represented the same luxury level. But Hermes took a completely different approach. They refused to license their name. They maintained total control over products and distribution. The result? That same Kelly bag today regularly sells for $20,000 to $30,000 at auction. That's a multiplication of value by over 25 times its original price. Here's the visual proof. The Cardin line shows licenses exploding upward while legacy value remains flat. The Hermes line shows licenses staying near zero while legacy value rockets into the stratosphere. But the most damning evidence of Cardin's strategic failure was yet to come: the unsellable empire. The ultimate test came in 2011 when Pierre Cardin decided to sell his global empire. After decades of licensing deals and hundreds of millions in revenue, surely his brand was worth a fortune. Cardin put his company on the market with an asking price of €1 billion. He believed he had built something incredibly valuable. After all, his name was on products in every corner of the globe. But the market's response was brutal. There were no serious buyers. Investment banks saw not an asset, but a liability. The tangled web of hundreds of licensing agreements with questionable quality control was viewed as a nightmare to manage. Industry analysts valued the business at closer to €200 million. That's merely 20% of Cardin's asking price. The gap between his self-perception and the market's valuation was the final verdict on his business strategy. Pierre Cardin passed away in 2020 without ever selling his company. He had sold his name so many times that the name itself was worth a fraction of what it could have been. The 3 laws of brand value. So here's the truth Pierre Cardin learned too late. The same truth that could save your wealth today. 3 laws of brand value that separate empires that last for centuries from those that collapse overnight. Law number 1, scarcity creates value. Ubiquity destroys it. Cardin forgot that luxury is fundamentally about exclusivity. When you make something available everywhere, it becomes valuable nowhere. Think about Bitcoin's limited supply of 21 million coins. That scarcity drives its value. Law number 2, protect your core asset above all else. For Cardin, his core asset was his reputation for futuristic, high-quality design. Every licensing deal that put his name on inferior products chipped away at that reputation. Identify your core asset, whether it's your expertise, your network, or your company's unique value proposition. Guard it fiercely. Once damaged, it's almost impossible to rebuild. Law number 3, think in decades, not quarters. Cardin's addiction to licensing revenue blinded him to long-term brand erosion. The most successful investors optimize for compound growth over time, not immediate returns. Warren Buffett became the world's greatest investor by thinking about where his investments would be in 20 years, not 20 days. Pierre Cardin chose to be rich in the short term and destroyed billions in long-term value. But here's the part I didn't tell you. Pierre Cardin isn't alone. Other billion-dollar empires made the exact same mistake, and a few spotted the warning signs just in time to save themselves. This is just one chapter in a larger blueprint of wealth creation and destruction. Luxury, freedom, and success are closer than you think. Don't just watch, take your next step. Choose our latest insights or a curated favorite, both waiting for you on your screen. This is the Wealth Project, deconstructing wealth, transforming your future. Subscribe, get the rulebook, and remember, you're now part of the exclusive club, Playing to Win.